I was just reminiscing with Steve Volge about my days as a Chippendales dancer, my early 20s in LA. It was about 10 years ago. As you can tell, trading's aged me a little bit. Hi, Lena. Okay, so from now on, guys, we start at the top of the hour, and that's why you can't hear anything. All right, until the top of the hour. Write it
Talk.
down. Yeah.
Microphone. There you go.
It's so great to have a producer, you know. In fact, I modeled my career after a broadcast journalist named Ted Baxter. Ted Baxter. Anyone remember Ted Baxter? A very famous newsman on the Mary Tyler Moore Show. Okay, you guys are just too young for me, so let me talk about what's universal. Shahab does. Okay. Well, Ted is, yeah, I'm the modern day Ted Baxter. Anyway, let's talk about the market. So, the only reason you guys, I didn't have my screen paused. I took this handle Forex Stop Hunter because of what I learned being on the CME Chicago trading floor, where all those evil men in the pits would look at the paper and see STP written at the end of it. And, they were very interested in those orders because that was liquidity. If they were short, they could buy into the sell stops or just wait to fade it, vice versa with buy stops, get long triggers the buy stops and use that liquidity to cover their long position. So now it's not done by evil men, it's done by faceless machines. And I'm not saying that this is going to be a big turn in the euro, but you see today's low and you see these two lows right here. I think they were the same. Here's 109.2680, and different platforms will have different prices. Okay, so this low was 26. So this low was 2680. So let me ask you, people go, well, Dale, how do you know where the stops are? So say you're watching all of this action and, and here you go, Euro's not, it could be a decent shot at 78.6. Maybe it turns and goes up. So where do you think all the stops were? People ask me, how do you know where the stops are? Where would you place your sell stop if you bought the market here? Anyone want to answer? How about some of you great equity investors at investing.com? You probably don't use stops. We have to when we're leveraged. Okay, so everyone had their stop under this low, right? Where everyone else does. That's right. Right here. So far, what's happened? We made new lows by 3.5 pips or so. And right now it's, you could still say, oh, well, probably good to be out. But what could happen by the end of the day, I'm not calling it because I really don't think the dollar's done, but maybe it happens for at least a short-term squeeze with euro not being weaker than the pound, which has been for a while. And, right now it's already 6 pips above their stop. So what I'm saying is the obvious place right under swing lows, don't put your stops there. Okay, because these things happen quite frequently. I'm sure it's happened to you. Give it some tolerance. So, give it 20, 30 pips under a swing high or low in case it's just, a search by algos for liquidity. Why don't you write that down? I will not put my stop 1 pip under swing highs and lows. I will give it tolerance of at least 20 to 30 pips. Three? All right. I'm really going to let my trade breathe. I'm going to give it 3 pips. Good one, Steve. You couldn't help yourself. Anyway, so just a quick little less, 35 pips Sean does. That's good, man. Because, if it's more than that, and it's usually not a stop hunt. Maybe for another day with a false breakout, but yeah, it's a good number. Okay. So anyway, here we have the euro, the dollar looks destined for new highs here. Look at this. Dollar's been tough, because you thought you had a top, you thought it would crash, then it closed lousy, and right here, and then all of a sudden here we are approaching the highs. Looks like we want to go for a third drive up here. I don't know if they could turn it here. I do think eventually the Trump administration is going to enter the market and intervene. That Mnuchin would be more than happy to accommodate him. So dollar's hard to fade. The only thing I'm taking a shot in is fading the dollars, the Swiss. Because look, the Swiss is last week when the euro was making its double bottom, the Swiss was up here. Now the euro's making new lows, and we haven't made new highs in Swiss. Just a shot. And I guess this 29.75, Steve called it. Okay, because Steve said we had to close at the S&Ps under 29.60 for there to be a problem. And I thought 29.75 was going to be an important pivot. And as you can see, it rejected it once, one, two, three. Once it got through 275, something else is going on. So we'll see if we have a failing rally, or the Super Bulls or the Bulls will say this formation from here to here. And I talked when Grega was here, he had some wave count that said we could go to 3090, something like that. And the measured move from here, if we're going to fulfill this formation, is up around 3100. So I'll tell you what, there's something about being on a team, and I'm sure you've been on some type of teams, you guys. Have you been on a team? Sports team, maybe where you work? Have I tried RSI on 3? I'm not sure what you're asking, but any kind of team. Okay. So when you're on a team, don't you miss your teammates when they're away? It doesn't seem like the same team. I know I know like in the NFL, they have a saying, next man up, because someone gets injured, someone's got to be ready to step in. Well, we do that here for each other. But I'll tell you, when someone's away, it just doesn't seem the same. And we'll carry on, we'll do our best, but it's not the same, because the chemistry of a team is very hard to replicate if someone not on your team isn't around. So Steve made us miss him all through the month of August, taking multiple vacations. And Blake was only gone for a few days, and our attendance and face dropped, I don't know, a few hundred people, because Blake wasn't here doing his table dances about the markets. So without further ado, my friend, and as he
Table dances, huh?
as he would say, my colleague, Blake Morrow, is back with us today. How you doing, buddy? How was your trip?
It was fast. It was very quick.
Well, I saw that picture. There were sure a lot of bottles of wine on that table.
Yeah, one of the guys, which was really cool. He brought a couple bottles of his one of his sons, one of his three sons.
As a
Uh,
winery?
no, his birth wine. So
Oh,
he'd been holding on to these bottles of wine since like 1992 or 1993,
hmm.
and he broke them out. And man, I mean, it was good. We had some Italian wine, we had some French wine, and then this was
Argentinian wine?
Argentinian wine.
All right.
Yes, great stuff. So we had it's interesting because we went to this in
I wonder what
Greenwich.
color money he paid for that back then, because Argentina's had so many currency
Who
changes. I
knows?
used to talk to Valeria Bednarik at FX Street, and she would tell me, "Oh, we have blue money now. We have pink. We have green." They had the rainbow of currencies down there. Beautiful, beautiful currency market.
Well, I don't know what he paid for it at the time, but the wine was so good. And we went to a restaurant that we could bring our own bottles. So the guys Gelos they're wine people. I mean, they've been buying. They have just a lot of wine, and they've been acquiring them bottles
Yeah.
and cases for 30 years or whatever. So they actually left early to go uncork the bottles, leave them, let them aerate for a couple hours, and then brought them to the restaurant. And they find restaurants that we can bring our own
All right.
wine.
The big question is,
Good
Blake,
stuff.
well, you guys were having a great time. Were you trading
I
from the
was.
table?
I was short Aussie New Zealand until this morning.
Okay.
I was playing it on the short side. I was playing it into the RBNZ, and Aura has been a little bit more hawkish. So, and he had some hawkish comments last night that allowed for the Aussie New Zealand to slip to the back down to where we're currently at. And I closed it this morning as we were sitting around 107.20, and I've been short near 108 for the last few days. So I had a decent sized position. I think break below 107, it's going to open up for move lower. The only thing that's really starting to worry me right now is that we have this we have a president who's facing impeachment proceedings, which he's not going to get impeached, but what it's going to do, it's going to hurt his reelection prospects as he goes through the due process, or as Congress goes through the due process of impeachment hearings. It's gonna hurt him as far as his get people questioning him.
Yeah.
Some people argue that it's going to strengthen his base. I think it's going to be more of a negative personally. But the one thing that it's going to provoke him to do, it's going to provoke him to, in my opinion, this is again my opinion, I don't know. It's hard to know exactly what Donald Trump's going to do, but I would assume that it's going to provoke him to want to get some sort of China deal done quicker, sooner
Yeah.
rather than later. And so when you're short the Aussie New Zealand, you got to be a little aware of that, because any type
Yeah.
of positive China news might have a more positive impact on the Aussie versus the Kiwi.
Hey, Blake, can I interrupt you again? I was
Yeah.
doing a little bit of mentoring about showing stop hunts. The Aussie Kiwi was another classic example. That top, we were
Right
talking
here.
about it
Yeah.
here in Face. How many pips did it take out the previous high by?
I don't know, 10, maybe less
Yeah,
than
see?
10.
Another, see how they happen all the time, guys? So if
Yeah.
you had your stop over that previous high and use Steve's tolerance of 3 pips, you were gone, and 2 days later you would have been in the money big time.
Yeah. So you definitely do have to worry about,
Stop hunts.
stop hunts. And that's why if you have orders to just get you in when, the market trips these prices, you got to be a little bit, more careful. When you watch, when you're dealing with an entry, but anyway, I do think that the Aussie New Zealand can continue to break lower. And actually, I think that with the RBNZ looking like they're going to be on hold for a while, they don't want to dip rates into negative territory, although that they can, and we're still pricing in another quarter basis point cut going into November for the RBNZ. I still think that if it is positive China news, we might actually see the Kiwi outperform the Aussie. I think the risk is that the Aussie will outperform the Kiwi, but the Kiwi has been, you don't know how the market's going to take it. And if the market pretty short Kiwis, and there's some positive news, you might see the Kiwi actually outpace the Aussie. So anyway, what I'm trying to say here is 107 is pretty critical support, and I figured, well, we're just ahead of that support. I'm going to cover it up, and I don't mind playing it back to the downside. I might wait for in this particular case, I might wait for a little bit of a bounce back to 107.50, and then look to short it up there if I can get it. So we'll see. I'm just kind of standing aside right now. You were talking a little bit earlier about the euro, and yes, the euro is really at. I mean, we just hit fresh lows here. I think your eye, coach, on a divergent dollar Swiss was very good observation. I actually shorted the dollar Swiss about 10 pips ago. I told everybody in the ForexAnalytix chat room, if you guys, don't know this is the private chat for, ForexAnalytix. One of the things I said a little earlier is right here. Let's see. We're talking about closed Aussie New Zealand. I think I have to go back and you can see this is where our comments come from. Let's see. Oh, I don't know where the hell I posted it. It was a little while ago, this morning. Anyway, over here I talked about shorting some Swissies. So and the reason why is we're up against and if you use ForexAnalytix and you're not in the chat room, you still got the analysis because it's right here. I'll just give it to you guys right here because it was a while ago. The Swissy is testing the underside of its trend line and the 78% retracement. This is also the 200-day moving average on the daily chart, which may offer some key resistance for the pair at 99.50. So, here we are up at this 99.50 and I'm like, well, I'm going to, it's, limited risk reward as Dale had pointed out, that it was divergent to the euro dollar. So it's like, well, I don't mind taking a dollar Swiss short up there because it's such manageable risk. Now, will it continue to break down from here? I don't know, but if we have some risk aversion, the Swiss franc is going to be a little bit of a beneficiary. Also, if the euro pivots off of these lows, which we have, if we can hold, and I'm not saying that we're going to, if we can hold, we might have a triple bottom here in the euro trying to develop. All I can tell you right now is 109.20 is really key support. I would be a little nervous being short down here, as personally, which I'm not. I'm just saying I'm not in the euro at the moment. I'm just saying if I was short, I'd be a little nervous knowing that this is such critical support. And even if we do break lower, how far are we going to go? Are we going to go to this descending wedge support, which it basically is at 109? This you're talking about, we could trip the stops below the lows and then turn around. So I think you have to be a little careful with the euro dollar here. Now, what most of us are waiting for is really the week of, I think it's October 7th. Double check that. October 7th. That's when China-US trade negotiations are going to happen. The principal trade negotiators are going to be meeting that week. So between now and then, you have to imagine that it's going to be a little quiet. And then also next week, we have non-farm payroll. The jobs report or the employment report that we've been, employment in the US has been relatively strong and it's been resilient. I do feel that when, not if, more when, employment starts to turn lower in the US, it's going to happen rather quickly and it's going to be a little scary. So, and I think the market's going to start reacting to it. I don't know if it's this month, but I think next Friday we have to be very cautious with the employment numbers that come out. If those employment numbers look a little weak, that's what could theoretically put the euro dollar back at 110 or maybe even, higher than that. So, next Friday is a key day for me. And then, obviously going into, the following week into these Chinese negotiations, there'll be the next key event. And like I said, I think Donald Trump is probably chomping at the bit to get some sort of Chinese deal, truce done, because this impeachment process that, like I said, it's not going to, I don't think it's going to go anywhere. But just the process alone is going to hurt I think it's going to
popularity.
popularity, confidence in him,
Yeah.
and he's going to want to do something. He's going to be more.
Well, I hope he opts for a trade deal, because a lot of leaders, when they're under duress, will start a conflict. And I worry about Iran, bomb, 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 Iran.
Yeah,
Ever
yeah,
hear that song?
yes, and that's a good song. Well,
It's Barbara Ann by the
it's
Beach
Barbara
Boys.
Ann, yeah,
Yeah.
yeah, I know.
Not Bomb Iran.
I know.
Okay. All right.
And you don't want me to sing it, but I don't think Donald Trump he's a warmonger. I don't see him as being a warmonger.
I don't either. I'm just saying, when desperate times,
Yeah.
I mean, look how people came together, even the Democrats behind George Bush after 9/11.
Well, yeah,
Yeah.
but that's event driven, and this, when you're talking about economic, he's going to try to do something that's going to be better for the economy.
Yeah.
And I don't think war is what he's going to be, looking at.
I hope you're right.
I hope I'm right too. I mean, I'm just saying.
Yeah. Okay.
But anyway, I think that we have to watch. All I want to say is I want to watch, the support here at the euro dollar around the 109.20 level. The dollar yen's kind of floating around it. The dollar yen came under pressure when I was traveling, as the impeachment process looks like it was going to start. People got a little worried, and then, they're like, oh, look at the transcripts that are coming out. They're not a big deal. The dollar yen recovered, but we've been monitoring this 107 support level for a long time. If you use ForexAnalytix, you know that support was there. It's also a 38% retracement. So I think while the dollar yen's above 107, we shouldn't be too worried about like risk aversion. I think if the dollar yen breaks through 107, that is going to be more of a cue for us that stocks are coming back under pressure. But right now, you look at the S&P. The S&P is just, stationary near its highs. You could argue that, oh, Blake, maybe we have a double top here. Yeah, maybe, but I'm just looking at it as resistance right now. It's not. I don't think it's a double top yet. I think it's just, that's just here. Let's make that a little bigger. I think it's just really key resistance at the moment. Not so much a double top, just resistance. Anyway, yeah, the euro is getting a little bit of a lift here, isn't it? Look at the euro. I mean, yeah, like I said, who wants to be short down here? I mean, yes, Germany's numbers have been horrendous. Yes, actually, European numbers have been horrendous. If you remember Monday's PMIs out of Germany, they were disaster. One of the reasons why the euro is probably firming a little bit is we have end of month and end of quarter um, um, uh, we have all this end of month stuff that's happening, end of quarter stuff that's happening. The euro could very easily trade back up to 110. We have a lot of options expiring up there. God, you can see it's just getting bid up huge. I'm not seeing anything else other than
dollar in general seems to be under pressure against almost everything.
Yeah, the dollar is really, really turning a corner here. Which, like I said, it's end of month, end of quarter. We have a lot of options expiring around the 110 level in the euro. Maybe the market gets taken up there a little bit. So, that might be a risk. You just have to be a little bit more cautious the next couple of days in your trading, I think. So, good morning, Steve. Good morning, Stelios. How are you guys doing today?
Good morning, Blaker. I don't think Stelios is going to be with us today.
Oh, okay. I didn't know he wasn't going to be with us. Is he?
Yeah, he wrote it on Skype, but you were talking, so of course you didn't see it.
Oh, okay. Okay, got it. He says I'm buried. Don't think I'll make the webinar. Oh, okay. Got it. Okay, got it. So what's happening, Steve?
Having to do with the impeachment process, personally, Blake, I would tend to believe that under normal circumstances, it would probably do good for Trump. I think it would strengthen his base. The only reason I would be very skeptical about it is one thing. I think that Trump is the worst enemy of himself because he's very impulsive. And I do think that the whole process can lead him in doing, mistakes, big mistakes. So although the impeachment process itself, I'm not at all sure that it's going to hurt him. I think that, trying to compensate for that, he might end up hurting himself. That's my personal point of view.
Yeah. I mean, it's it's quite possible. I mean, it really is. I don't disagree with you. I think that we just have to be really aware of what he's trying to I think he's going to want to try to get himself out of into a better limelight with the voters. So I'm that's why I'm wondering how quickly he could put together a China-U.S. trade deal. I think that's the route he's going to be looking at.
This would be a great blog, just as an idea, how markets responded during prior impeachment processes. So, this is the third. So, you go back to Clinton, you go back to Nixon, because I know a lot of people are using the 72, 74 analog for what could happen here, fractal of it. So I think that people would be interested in knowing how markets react in unusual historical events like an impeachment process.
Yeah,
Yeah.
I don't know if it's going to be the same. I
Yeah,
think
it's not.
Well,
That's exactly what I
they're
want to say.
never the same.
Circumstances are totally different. For example, when Clinton was being impeached, we had an economy that seemingly was booming, right? Really booming, not, we're booming, but we need more monetary easing, and, PMIs are tanking, and et cetera, et cetera.
Yeah,
And
cycles rhyme, they don't repeat. But
yeah.
right? So
And I remind
anyway,
you that back in the Clinton's era, we had a very, very positive outlook for the economy because the general concept back then was, oh my God, look how great the economy is doing under a Democrat. Imagine if Republicans take over the economy after that. I mean, we're going to be doing even better. That was the general, climate. Now it's quite different.
Yeah.
Okay. Yeah, that's always different.
Yeah. So
it's different this time.
It's different every time. Well, Steve, I think traders are probably going to be pretty interested to see your charts and some of the crosses. I tried not to cover too much, but I think that the euro is going to be on watch today as we're trying to form this. Like I said, it's like a nice little triple bottom down here thus far, at least really key support. I wouldn't get too terribly excited about the euro down at these levels, but I think if we obviously if we get above 110.50, then it's a little bit of a game changer. But like I said, as a little earlier, I don't think I'd want to be on the short side of the euro right now. Not with all this.
No, definitely 1092, like huge quadruple confluence of supports actually, because we have some fib extensions as well there. So yeah, being short exactly on that support, seems a little bit crazy to me. So
yeah. So we'll see what the end of month, and I've been reading that there is dollar selling to be had here over the next couple of days as we wrap up the quarter, wrap up the month, and so you have to just be careful with dollar longs here.
We have data, by the way, today, right? Quite a lot of data.
Yeah, it's right here. So we have U.S. GDP and jobless claims and some
GDP deflator. Yeah, we have quite a lot of stuff coming out.
So
you want to stay for the data, or you want?
I love staying for the data since I can't trade when I'm staying for the data, and I trade for a fund.
No, just tell me. I'll take it over.
I might as well. I mean, we're 20 seconds away. So let's watch the data.
10 seconds.
Give me your mouse, Blake. I'll trade for you. Don't tell Gelos.
So GDP came in line. Well, let's see. There's the. Yeah, I mean,
GDP deflator higher, actually, quite a lot higher. 2.6 versus 2.4.
Yeah, personal income came in a little weaker than expected. So
money supply for the EU was earlier. Yeah, okay. So I don't think something that will be really moving the market since the major data came in line. I doubt it that we're going to see any big reaction from that.
All right, guys, have a great one. Steve,
You too,
thanks for
Blake.
holding down the fort. I got to go. You
Okay,
guys have a
mate.
great day. Bye-bye.
You too. Bye-bye. Hey, coach. Let's see. Okay. So let me open your question box and see what we have here. First of all, of course, no need to cover euro here. I mean, we said everything that needed to be said. Blake covered that. At the same time, if we want to have a look at the cable, there we go. So let's have a look at the cable on the 4-hour chart before we move to more stuff.
And you know, gold silver ratio will be interesting because silver was down 3%, with gold only down 1 1/4 yesterday. So
yeah, we're going to have a look at the metals. Look at
okay.
look at pound, by the way.
Yeah,
coach.
look at it.
I mean,
Yeah.
theoretically speaking, we've triggered here a head and shoulders formation.
Yeah.
We retested it once. We seem to be bounding now, but you know, once again, I have
think
to say
this
that
is where Grega might. You want to give the crowd a freebie on Grega?
absolutely.
Because he was here, he showed it anyway for free during face. I think this might have been the area he was looking for it to pull back to.
So
when he was
this is
here.
what Gregor thinks. Cable keeps moving higher, so it becomes more and more blah 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 blah. And look at the 4-hour chart, so you get the point here.
All
So
right,
bottom line, Greg expects, you know, more
about 123-ish
more
before
downside towards, from what I see, roughly
282.
123.
Yeah.
Roughly towards one. And as you see the invalidation point, because basically, you know, if you know Elliott waves, what he shows by this is that, you know, this point of view that this is a corrective move lower stands true as long as this pullback does not extend beyond 122.33. So as
Wave
long
2.
as, yeah, exactly.
Yeah. Okay.
Exactly. The beginning of wave 2. Exactly. So bottom line, he expects a pullback that's, you know, probably going to stop earlier than that. Another support area he indicates here is 122.82. So bottom line, he
70
does
pips
expect,
away.
yeah, he does expect, you know, somewhat of a bigger pullback. Just a little comment here. If we want to take away the importance of the 123.70 zone, and we want to be talking purely about the inverted head and shoulders formation, just keep in mind that the inverted head and shoulders formation can easily be redrawn like this, which means that theoretically speaking, we can rebound towards 124.20 and still have a valid inverted head and shoulders formation, okay? Because as you see, you can draw the inverted head and shoulders the head and shoulders formation neckline as inclined based on how price action evolved here. So keep that in mind. 123.70, 123.80 is important support resistance area, but the neckline actually passes from higher if you just want to focus on the head and shoulders formation. Basically, you know, any rebound towards 124.20, you know, the closer we get, the best the risk reward ratio to look for at least one more leg to the downside. So bottom line, that's the outlook for the cable. What did you ask for, coach, before? Gold and silver and the gold silver ratio? So 4-hour chart on silver. I'm paying attention to this 61.8. You see horizontal support resistance area as well at 1770. I think that the break below this level probably will indicate that there is another leg starting the downside. You can even view this latest rebound, now we're on a 4-hour chart, keep in mind, as something like this. There you go, something like this. Okay, So bottom line, quite an important support area being tested here. And let's also have a look at gold on the 4-hour chart, because we've been looking at them on the daily the previous days, and on the daily not much has changed. We did have a very sharp move lower in gold from that resistance. I mean, that was like the the last area that we could have seen a reaction lower before we could give up in looking for downside. But still, in order for me to trust that we're indeed starting another move to the downside, I would want to see a break below this ascending channel that you see here in red. Okay, especially of course 1490 also, so a lower low. And then I think we're going to be on our way initially to this area, the 61.8 at 1460, and perhaps likely even lower towards 1430, 1440. So that's the outlook for the for gold, and having to do with the gold silver ratio. Let's have a look at that as well. There you go. Gold silver ratio retesting once again this descending trend line resistance. First time we tested that like 10 days ago or whatever it was, we got rejected. We moved lower, we're rebounding again, and we're testing this again. So, it remains to be seen what we do from here. But this descending trend line is definitely important. I mean, we've already tested it like once, twice, 3 times, 4 times. This is the
almost
fifth.
Looks like we could get a C or a 3 here.
Yeah, might be the case in any, regardless of how you want to see this. I'm pretty sure that if we break above 85, we should see an extension higher.
Yeah.
So 85, quite an important level for the gold-silver ratio, and it remains to be seen if perhaps we've already finished the corrective move lower in the gold-silver ratio.
Well, if the bonds mount another rally, which I don't know, it looks like they're in an ABC to the downside. I would think it would be gold would be the preferred long, because it's not as economically sensitive as silver is. Just a little fundamental stuff.
Speaking of bonds, coach, I have to tell you that my fingers are really itching to get short treasuries here. You can see why.
Yeah, I do. Get an ABC.
Yeah. So I have to tell you that I'm very, very, very closely monitoring this little rebound that has started now. If I get a chance to be short near 130.5 there, I think I will be taking it. The risk reward ratio is going to be extremely appealing. And this is a 4-hour chart, by the way. So we're having a look at the closer look, and look at the bunds. A very, very similar situation here with the bunds, right?
Yeah.
I mean, a rebound that so far looks corrective in nature. So I have to tell you that so far the charts are showing that another leg lower is a likely scenario, and I do think it's quite an appealing proposition. So one of the trades that I'm closely monitoring, and I might be taking within the next few hours or a couple of days, depends on how price action evolves, is definitely being involved with one or both of those bonds. I'm already involved with bonds since some time ago, but only half a position, and I'm totally open to adding there and also getting treasuries exposure to the downside. So that's what I think about it. Now we have questions about Aussie yen, Aussie kiwi, kiwi yen, USD CAD, pound yen. Okay, Aussie Swiss. Okay, quite a DAX. A lot of questions today. Okay, so since we're on a 4-hour chart, why not? We can stay here. Blake already showed the nice rejection on the daily chart. Now, if you want to have a look at the 4-hour chart, because we already, saw the daily picture.
Don't forget to cover Zlotny shekel.
Oh, absolutely. Yeah, my
Okay, I
favorite.
do a lot.
My favorite.
That's because I have to hedge my kosher kielbasa.
Yeah, I trade it every single day.
All right, buddy.
So just by looking at the 4-hour chart, you can even see on the 4-hour chart, we broke below this channel, we retested it, and we're moving lower. So I have to tell you that Aussie Kiwi looks good for a continuation lower, 1066, next downside support. Now, having to do with the Aussie against, let's start covering those that you asked for. So Aussie against the yen, there it is. Aussie against the yen, nothing has changed since I think we covered it yesterday. So bottom line, look at this. This is the 4th consecutive day that we're consolidating just on top of this horizontal support resistance area. So this is a big decision zone for the pair. I mean, this 72.50 area. A break lower, should extend losses, while a rebound from here might even, lead to a move towards 76.30. So, nice risk reward ratio if you want to be long because you're risking very little. But I have to tell you that the more the days pass and we're just consolidating on this, I think that the higher the chance that we're going to end up breaking lower. Now, having to do with the Kiwi yen, we still see some nice RSI divergence, but I can't get past the fact that we got rejected from quite an important support resistance area at 69.20. So as long as we stay below that one, I wouldn't easily get involved with the upside. I mean, yeah, I do see that we're diverging and everything else, but I think it's quite a dangerous proposition. Don't forget that the big picture here is also that we're still trading. Look at this purple channel. We're still trading within a descending channel that dates back to like April 2017. So we're talking about almost 2.5 year descending channel. So below 69.20, 69.30. I would have to maintain a bearish bias. I mean, you have to respect what the trend is, and the trend is lower. So only if we break above 69.30, I'm going to start carefully exploring, bullish possibilities. Until then, I think it's quite dangerous trying to be long. Of course, as long as you know what you're risking, and you're willing, to lose that money, it's fine. But personally, I'm not looking to do that. Now, you asked about pound yen. So pound yen, quite a similar situation here with the Kiwi yen we were looking at. The reason being, pound yen got rejected by the first confluence of resistances we found here, and it's pulling back. So far, the pullback doesn't really look impulsive. So I wouldn't, rule out another move to the upside. But in order for me to get involved with that, I would want to see a break above 135. So as long as we are below 135, I'm not looking to be involved with it. Now, a break above 135, I think is going to lead to a squeeze higher and an extension towards probably at least the 61.8 at 140.34. Okay. What else did you ask for? We covered this. Okay, yeah, USD CAD. So let's have a look at both the USD CAD and the USD NOK. Although I have to tell you that having to do with the USD CAD, nothing really has changed in quite some time now, which is quite annoying, I have to admit, but it is what it is. So you see, we're still consolidating within this long-term ascending channel. You can see it here in blue, and more specifically within a wedge here. Okay, and as you see, volatility has kept decreasing. 133 is undeniably an important resistance area. The 200 daily moving average is also there at the moment, and a huge support is also not far away. Currently passes from 131. It is this long-term channel support that passes from there. So trapped, bottom line, we're trapped below, between 131 and 133. In between, I wouldn't really be doing anything. Now, break above 133 is probably a good buying opportunity. Break below 131, I think it's a huge bearish event. and it should lead to an acceleration lower. As I said, in between, within those 200 pips, 190 to be exact, personally, I wouldn't be doing anything. I'm just monitoring the pair and waiting to see in which direction it's going to end up breaking. Now, having to do with the USD NOK, also, a period of consolidation here. Initially, I was hoping for more downside. It fooled me here by falsely breaking intraday below the head and shoulders. There was a head and shoulders formation here and a nice neckline. We broke below it and then we reversed higher. So that was like a bear trap. Now the price action looks more like a horizontal consolidation. If that's the case, you definitely need to respect the upside, because horizontal consolidation is something that usually leads to a continuation in the direction of the trend, which in this case is higher. So I would have to say that as long as we are spending some time within this triangle, the chances of a resolution to the upside for at least one more leg higher is high. So that covers those. Aussie Swiss. Oh, I forgot about that. Aussie Swiss. Aussie Swiss. Let's see. That used to be a very nice carry trade, by the way, in the past when Australia had high yields, but of course that's not the case anymore. It still has a positive carry if you're long the Aussie, but so this is the situation here with Aussie Swiss. We had this range. Once it broke, we triggered the double bottom. That's what I had drawn there. We completed this double bottom formations target, and now we've pulled back, found support in previous resistance, and it remains to be seen if that's going to be enough to produce another leg to the upside towards these highs and also these broken triangles, previous support as resistance. I have to tell you that this looks like a very decent risk reward ratio against 66.50, the lows, right? It's like a 70 pip, 70, 80 pip stop loss, and it can potentially produce from where we stand like 220 pips of upside, right? So, I mean, very, very decent risk reward, like a 4-to-1 risk reward or so. Almost like 3-to-1, 4-to-1. So it's quite decent. I mean, if you like it to the upside, you also have positive carry. Not something to write home about, but at least, instead of paying overnight, you're getting paid something overnight to hold it. So yeah, I mean, not bad actually. Okay, it's all phony, total fraud by Democrats, fake phony. Okay, listen, I have the huge privilege of being a foreigner, so I don't have stakes in the US game. In my eyes, the political situation in the US, as it has happened with the vast majority of developed countries, it's going, downhill year by year. I mean, if you compare politicians that we had, let's say, in the 80s with politicians that we have today, it's, it just wants to make you cry. So I know that each one of you has their personal opinions, but my personal advice is, try to stay detached from, the sentiments you had. I mean, I don't like Trump at all. But I do believe that, this impeachment process is going to lead nowhere. I think it's purely a political game. Do I think
You know what, Steve? It's more than that, because I am here and I'm telling you, it is dividing friendships. It's dividing families. A friend of mine just told me a story. One of his best friends invited him over for Passover Seder, which is a Jewish holiday. And he leaned over and said, "Can you believe all this deep state stuff that's going on," which is a talking point on Fox News. And his friend who invited him over, very nice, to join his family for Passover, stood up and said, if you're, all Republicans are ignorant a-holes. Okay, these are best friends. It happens mainly, families are usually like the same, but it's that divisive
Yeah, I know.
that
And that,
relationships are being torn apart
yeah, absolutely. And that
because of
helps the
this.
whole
I've
nation.
never
Yeah.
seen anything like this
Yeah,
ever.
yeah, and I know, because it's the form of modern politics. I mean, we've experienced the same here in Greece.
It's terrible.
You can't imagine the division we had with the referendum of 2015. I mean,
And then I was talking to my friend, and he has a tendency to interrupt me. You know, and I'm talking about some personal things, and he started to interrupt me, and I said, "And don't interrupt me." So he hung up on me, and I called him back, and I said, "You're just like our president."
anyhow, the bottom
What do you
line
think
here,
of that?
bottom line, I think that the way that the political balances have have shaped to be, I think that the way that democracy functions currently is
Yeah,
hugely problematic. Hugely problematic.
yeah.
So it's a very sad
Anyway,
situation. It's a very
yeah, it
sad
is.
situation. Yeah.
But he's a, he is a lot like him. He doesn't think, he just blurts out everything in his mind. He'll hang up on you if he doesn't. I'm telling you. And he loves our president. It's interesting, isn't it?
Personally, to be honest, if I lived there, I wouldn't be voting for any of those. And I really don't like this duopoly that has been built. I think that the U.S.
All right, we better
Democracy,
stop talking to
yeah,
politics.
would benefit a
Joel,
lot more if it was a more open process and
yeah.
not a duopoly. You know what
How
I
about
mean?
taking the money out of it and making them public elections instead of
Yeah,
lobbyists?
that's a big conversation, but definitely a
No.
lot of things are desired
Yeah.
and have to
Anyway,
change in the vast majority of,
anyway,
if not
how do
all.
we make money today? So, what do
So
you think?
going back to, because we have stuff to cover. We have
Euro's
question
still
about
acting stiff too.
euro has stabilized roughly at
Yeah,
1.095, and you know something. If we
Swiss looks heavy.
before I cover those, let me show you the DXY, because the DXY. Look at this. The
Yeah, shouldn't it
DXY
get in
is,
one more drive to?
yeah,
Oh,
the
okay.
DXY
Wow,
is
look at
still,
that.
yeah, the DXY is still pushing higher. But look at
Yeah,
this. First of all, we're still
right.
trapped within
Yeah,
this ascending channel. We had that little spike at 99.37,
yeah.
and look at the divergence in the RSI. It's quite obvious that there is no momentum here, right?
Even
Um,
at new highs, it won't confirm unless
yeah,
we blow to 102.
unless we accelerate,
Yeah,
unless we suddenly see the DXY wake up, and instead of producing like slow choppy moves, higher lower higher lower higher lower, we see some type of a lift off to the upside. So
we
if
get to
that
102, I'll convert every dollar I ever earn for the next several years.
102, by the way, is quite a nice conference of
Yeah,
resistances. So
I won't hold dollars at 102, and I'm thinking for a long time. So anyway, that's my Nostradamus.
another thing to consider here, Dale, is, let me extend it because some days have passed, is this trend line.
Oh yeah, hold on, Enrico. Yes, we record these every day. They're on our website.
Don't forget that we also have this purple trend line, which was acting as support for a long time.
Yeah,
And once we broke it,
I
we've
love those
already
lines.
retested it 3 times, one time
Yeah,
here, one time there, one time there,
yeah,
and it keeps rejecting us. So, you know, is the DXY still in an uptrend? Undoubtedly. It's the definition of an uptrend, higher lows, right? So,
yeah,
anybody that tries to say, oh, the DXY is like bearish here, at the very least, is jumping the gun.
yeah.
But
It might be in a topping process.
might be in a topping process,
Might be.
might be. But
That's the
something,
most bearish I could get
one
right
thing
now.
that is undeniable is that there is no momentum to the upside. I mean, we are very stable. We remain very well bid. But if we actually do turn lower, I think that there will be a lot of people that are bullish all this way, all this very, very, very slow way higher, that are just going to give up. And if that happens, and you know, because the big question is here is, where would they give up? Where would these people give up? I think here. At the worst case scenario, 95.80. Why? Because then we have a lower low at the very worst case scenario. Perhaps they give up earlier than this. Perhaps they give up when we break down below this ascending channel support, which currently passes from like 96.60. But at the very, at the worst case scenario, in my opinion, below 95.84, this previous low, I think they give up. And if that happens, then we should be moving lower and quite fast. Now, you mentioned the S&P to begin with, and yes, I kept insisting that the 2960 area is all that matters. 2 consecutive days, we've penetrated through that level intraday, but as you see, we never managed to close below it. So the situation remains the exact same. 2960, key support area. If we manage to close below it, you should expect continuation lower towards at least this ascending trend line support, which currently passes from 28.80, 28.90. Alternatively, as long as we hold 29.60, the path of least resistance obviously remains higher. Now, having to do with the DAX that we had a friend asking a question here, here's the DAX planned lower. Actually, let's have a look at the DAX on the 4-hour chart. I think we're going to get a better point of view. There it is. So DAX, there you go. Broke below this ascending wedge, posted, let me draw this, a double top. And now we're retesting these ranges, support as resistance. So if you want to be short for another leg higher in the DAX, which is likely in my opinion, to see another leg high, lower, sorry, towards the 38.2% fib, I think this is where you want to do it, right? Because if we start going back within this zone, you know, I think that there is a decent chance that we will have completed this move and we might have started another move to the upside. So that's what I think about the DAX here on the 4-hour chart, so you can get a better short-term outlook about it. Now, my thoughts on CAD yen, sure, and USD yen. Yeah, absolutely. So USD yen, I'm not going to give you much of a thought on USD yen, and I'll tell you why. Now, if you look at it on the 4-hour chart, we did break below this ascending. I was monitoring this ascending trend line. We did break below it, but look at the price action that we've had since. I mean, this doesn't look impulsive in any way, right? So the way we've been moving lower, I mean,
how about the way it went up? That didn't look so impulsive either, did it?
I agree. That is the problem with reading the USD yen at the moment, coach, is that I don't see any of the recent moves being impulsive, which means that we're
corrective. Everything's corrective.
Yeah, exactly. So, you know, would I be doing something with the USD yen here? No, I wouldn't. But I would understand why somebody would expect that another leg higher would begin from here. I mean, I would understand seeing this type of a pullback. I would understand why somebody would expect another leg higher.
How about yields? How about your outlook on treasuries might drive it to 109?
That's a good point. As I told you, it looks likely to me that treasuries are going to be producing one more leg to the downside. That would imply, obviously, another leg higher.
Obvious
yields.
To you and me, but not to everyone.
Yeah, that would also play well with a scenario in which the USD yen produced another leg to the upside first. So just based on my outlook having to do with the treasuries, USD yen looks likely to benefit in the short term for at least a period of, you know, some days or weeks with a move higher. But would I be putting my money in USD yen? Nah, I'd rather put my money in treasuries, which they seem to have a much easier to read technical picture, than put my money on USD yen. which is a much more complicated, because don't forget that USD yen is very sensitive with what happens with yields, but that's not the only factor that is moving it, right? So, I mean, it's not necessarily true that exactly what the treasuries are going to do, the exact opposite is going to happen by the USD yen. Okay, they often have a very, very close correlation, but that's not a given. How much time do we have, by the way? Do you have a guess?
None. I have one of the best guests I've ever had.
Which is?
Chad Del Rosario.
Okay, so give me just 1 minute to go over some things very, very fast. Question about Euro Kiwi. Euro Kiwi got rejected once again from these highs, retesting 50% fib. What would you be doing with it here? Answer, nothing, right? Because we're in the middle of this previous range. So, you know, selling it once it got rejected from there made sense. Selling it once it retested this horizontal support resistance area after finding a low there would also make sense. Now, it can keep moving to the downside. There's no question about it. But, you know, I think that risk-reward ratio is not there anymore, right? And gold looking like a head and shoulders. Yeah, too early, but it might be. I guess which one of the best for scaling chart, logarithmic or arithmetic, depends on what kind of time horizon you want to be looking. Logarithmic chart is a very useful outlook for any chart if you want to look at a multi-year time horizon, then it makes sense to use a logarithmic. But whenever you're looking like at charts, you know, for trading, like, you know, intraday or, you know, on a daily basis or swing trading, makes no sense to switch to logarithmic. Okay. Dale, a question for you from Joshua. What would you hold as an alternative, Dale? It's hard to buy dollars here, but easy to hold them. That's a good question for you.
At 102 Dixie?
Yeah.
I'd hold Aussie, and I would hold Euro.
Okay. Okay, coach.
And metals.
I'll be here back tomorrow. So, you know, whichever question we
And
didn't
my
manage-
crotch, in case I'm wrong. Gotta hang out to my boys, as Seinfeld would say. Anyway.
So I'll be
Sorry,
I'll be
buddy.
here tomorrow again. Blake is going to be here tomorrow. Stelios is going to be here tomorrow.
All
So
right.
whichever questions we failed to cover today, you know, be here tomorrow and we'll do that for you.
Thank you, Stephen. In the meantime, you hold on to yours too, buddy. All right.
Okay, coach.
Stick around for Chad. Chad, I'm going to mute you now, bro. Really looking forward to meeting you. Yeah, Chad.
Perfect. How's it going?
Nice to meet you.
Nice to meet you as well.
So to share your screen, there's a green box. If you just float your cursor around the drop-down menu and
Share.
it'll say share. Yeah.
Continue. Desktop 1.
There we go.
There you go.
Okay. We got
Perfect.
you.
Perfect.
I think you need a few more desktop icons.
Yeah, it looks like
You know,
look, that looks like mine. I do the same thing. Does it take a while to start up your machine?
No, you know, I bought one of those $3,500 MacBooks that
Oh, okay.
yeah, well, I mean, it was kind
You're
of
living large, Chad. What can I say?
to be honest, it kind of went to the story of how shitty it honestly is. It's
All
not,
right.
really not
All
that
right.
good.
All right. So a tweet must have attracted me to something you put out on Twitter. I found you there.
Sure.
So I'm interested, Chad, as I asked, you know, I've interviewed almost 1,000 traders over the years. I'm always interested in what the catalyst was that brought them into the industry, what they were doing before, and kind of give us your trading journey story into from point A to where you are now.
Sure. I think I have a story kind of similar to a lot of traders. I was going through a time of change. You know, I was actually fired from a job, and I heard about, Forex trading, and I started to dive into it a little bit. And this was back in 2015, so it was early on, and I was pretty young. I'm 30 now, so
Okay.
talking 4 years ago or so. And honestly, I remember my mom. She actually ended up giving me $7,000 cash, to get me started.
Well,
And
yeah, my mom said, "Honey, get a real job." So
oh,
that's pretty. Anyway, that's supportive. So,
yeah.
what job were you fired from before you got your
So
mom
I
gave
was
you
in the
money?
I was in the real estate industry,
Okay.
and I would go through what happened, but it's all about political correctness, and
Okay.
so
All right.
and so
Anyway,
anyway.
hell of a bull market there still raging. Do you think, since you were in it, or do you think there could be a repeat? Everyone's saying that, what happened in '08 could never happen again. Do you think so?
I think it's all going to happen on a bigger scale now, to be honest. I think what's happened is we've just put a band-aid on the big problem. Quantitative easement or easing is obviously an experiment. We haven't seen too much data from it. We get to see maybe Japan at most, with what they're doing, and we haven't seen anything positive through there as far
So
as
you
I'm.
think real estate values can drop from wherever they peak, and maybe we're
Yes.
around it now, 30, 40, 50% like they did in '08, '09?
Um, I think it could be around there. I was looking at some data the other day, and I found out that our debt in the housing industry is actually higher than it was back in '07 and '08. So, that's something that people don't really talk about a whole lot.
Yeah.
And to me, that's pretty wild.
Yeah, it's hard to and so people are probably using, because here in California, we've actually taken out the, '08 highs and values, so
You know?
with rates here, they're probably using their equity as an ATM machine again,
Yeah. Well,
if
do you
that's what you're saying.
notice? I don't know if you noticed, but something that was very interesting to me is rates have been dropping, but I noticed the housing market's actually dropping in sales. So I think what's happening is the actual housing prices are just still way too high. Everybody's going, why am I buying this high right now?
Yeah,
So even with the interest rate drops, if we're not seeing the housing market pick up right now, I mean, how low does it have to drop till we actually see that pick up again? And
okay.
that's where I think we've reached the top of the market.
Maybe the dollar is part of the story too, a deflationary signal. So I see you have this wedge here, and
Yeah, up on the
why don't you
DXY.
tell us what you're looking for here?
Okay, so I'll kind of go through my chart and charting styles before we go into it. I kind of color code my levels over here. So I have weekly levels in gold, daily levels in red, green, and then the gold up here is my weekly resistance, blue down here is my weekly support, green.
What are the levels based on? Fibs
Um,
or
so so what I base my levels on is I actually learned something through a gentleman named ICT. I don't know if some users or traders out
oh,
there.
Michael. I've
Yeah.
interviewed Michael. Yeah.
Yeah, he's an interesting guy. I honestly don't follow too much, but one thing I figured out from him is his supports and resistances are just bar none like I've ever seen. And so I use his order block technique, which basically takes the end of the trend on the flip candle right here. If you look, you're going to take the whole entire body of the candle and you're going to outlayer that. And that right there is your order block.
Michael has spawned quite a few traders.
Yeah, I mean the guy
Yeah. Do you
has.
know Saeed as well?
I actually don't. I don't.
Okay. Yeah. Okay. All right. So you came up with this method based upon Michael's technique, and
Mhm.
I've seen, yeah, and just like Michael, no indicators. So you trade naked pretty
No,
much?
so on this DXY, I just don't have any indicators on because
Because I
it's
was going to tell you, if you do, to keep your shades drawn.
sure. Yeah. Yeah, you never know. You never
All
know.
right. All right.
But over here, so I'm pretty simple though with the indicators. So we'll go to ES right here and see what futures are doing. Um, so I use a modified RSI tool who I grabbed a off of Twitter. There's a Twitter profile named Storm, and he has amazing indicators that he scripts himself. And so
I
this
see.
one is based off of divergences, and that's one of the techniques I use the most is divergences.
Oh yeah, me too.
Okay, so perfect. This would be something interesting to look for. I'll kind of pop this on so you can see what it's called. I can't exactly pronounce that. It's like a German. Anyway, it does fantastic for divergencies. I've never used a tool that can spot them. You know, I've had a lot of traders, say they didn't spot the divergence, and I'll show them it, and then I'd say honestly, it's about 75% of the time the divergence works out as long as I'm actually using the divergence properly. Um, so anyway, looking here at ES before we have the open real quick here in 20 minutes, it's looking like we're hitting a good resistance right here. I believe if we move over this spot right real quick, I think we're going to hit new highs. With everything happening with Trump's impeachment and everything like that, it's looking like maybe things are settling down. We hit a big support level right here, and then we dropped a little bit lower. So I'm still not convinced until we actually reach over this level right here that we'll actually make new highs. So I'm not
Do you
making
have
any.
a count for a new high? Do you measure objectives and targets? A new
Yeah,
high is a pretty general statement.
absolutely.
Okay.
So when I do, I will use my fib targets because we don't know where we're going here. We're going into
Uncharted waters.
yeah, price discovery. It's one of my favorite things actually. And honestly, the easiest way I've ever been able to judge where something is going to go are from fibs. So,
Okay.
I'll flip around my
Let me guess that what you really love about trading
mhm.
is that you don't have to wait for an escrow to close to get in and out.
Oh, absolutely. Absolutely.
I couldn't. I did it a few times. I can't. I need to be able to, you know, get out at the market
Yeah.
on things. Anyway,
Yeah, you need to be able to just close when you need to.
yeah.
Sometimes it doesn't
Anyway,
happen.
dollar weakening. I know I probably distracted you, Chad, but
Sure.
you were showing a dollar chart up there. Were you
Sure.
negative up there?
So
Because
kind of what I was kind of looking at before I was listening to the other gentleman before you, and
yeah,
I noticed the 102 target's pretty a
uh,
common thing that I've been hearing.
yeah,
And
me
so
too.
I do have that target as well. That is one of my fib points up here that
Okay,
would be
that's
hit.
why everyone has it because people use fibs.
Yeah, so it's kind of that whole idea that if everybody's using, is it really going to happen? I tend to just kind of shy away from the common what everybody's thinking.
Hmm.
To me, I'm not going to use this wedge as the deciding factor of where it goes because I don't use patterns on a non-tradable asset. It's uh, it's
What do
just
you mean untradeable asset?
well, I mean the dollar currency index, I mean, is just based on weighted baskets of currencies. So I'm not actually trading the DXY.
Okay, you're trading euro and other dollar pairs, not
Yes,
Dixie.
exactly,
Okay,
exactly.
why do
So
you follow it then?
because I'm looking at the actual weighted strength of it. It's just to me an average value of how it's doing in the highest weighted.
Okay, why the Dixie instead of some of the other trade weighted that aren't as heavily biased or weighted towards euro?
Um, I actually don't have an answer for that.
Okay,
I've just
well,
kind of always used the DXY.
okay,
So kind of just a personal thing that I have going for me.
all right, well, okay, I'm like that too, creature of habit,
Yeah, that's kind of
good
how it.
and bad.
Yeah, absolutely. And it's one
All
thing
right,
with trading I've learned is, sometimes you got to break those habits.
okay. All right. So, what are you thinking here? You're just neutral the dollar because it's just in the middle
So,
of this formation,
I
or
mean, I'm
what
kind
do
of
you think?
so here's my whole idea with DXY. I mean, we have a stronger USD right now due to stronger data and perceived lower risks. The trade war is seeming to ease up a little bit. Impeachment is possibly a thing. It sounds like that's a positive thing. I'm not sure how to take that right now, but I mean, the devaluation of the global currencies has also helped spike the USD.
Okay, so your answer is I don't know.
Yeah, yeah. I mean,
Okay,
I
all
play
right.
level by level.
Let me coach you so that you
Sure,
can save a lot of energy
sure,
because you're a young guy,
sure.
and it's probably hard for you to say that.
Yeah, absolutely,
I
absolutely.
don't know, because if you say I don't know, it makes you think like you're stupid.
No,
How come you don't know? You know
see,
what? It's wisdom to
I would
say
never
I
say
don't know.
that because I think trading is a moment by moment interaction. I don't
Okay,
think
but a lot of people have a hard time with I don't know and I was wrong.
I think that's the worst thing that you could possibly have as a trader. If you can't admit you're wrong, and if you can't admit
Okay.
to changing your bias in a minute decision.
Yeah. Well, here's one for you then. WD Gann. If you don't learn how to change your mind, you won't have any change left.
Absolutely, absolutely.
Okay, so I'm just saying I got from you, you were uncomfortable saying I don't know because when people are presenting a chart to me and they start talking about all the fundamentals and cross currents, it
Mhm.
tells me, you could save time and say, ah, I don't know.
Yeah, you could, but I think there's two ways you can say I don't know because I think there's two directions that you always have. So you can
Okay.
limit the possibilities of what's going to happen. So if I say I don't know what's going to happen, I can say, okay, if it breaks above here, I have X I can do. If it breaks below here, I have X I can do. And what I have are my already supports and resistances where I can target what's going to happen after that.
Okay.
So I think that's the
Okay.
best way to look
Great.
at an I don't know
You
situation.
pass the test. So it's neutral until price action does something.
Absolutely. I'm
Got
definitely
you.
not taking any trades before it actually does something.
Okay. So you were on the S&Ps after that, and you said you needed um, a level to be taken out for a shot to new highs.
Sure, absolutely. So we're looking right here. We're just going to look at ES mini futures real quick since we're not open just yet. We're looking around right here. The 29.95 level is a pretty big area, and we'll go on the daily and show you where my resistances are. So as you can tell, it's getting hit right here with that wick. And I believe right here, there's a big volume profile, as you can see, that we need to pass. But once we get up here, it's pretty much smooth sailing.
Is
As
that
far as,
market profiles or what, Chad? What is that on the right-hand side?
so it's a VPVR. That's the volume profile. It's going to show you.
It's cool.
Yeah, it's definitely one of the best trading tools I use. Really, what I use when I trade are support and resistances. And if I'm going to use an indicator, it's going to be confluent with those. I don't really
Okay.
use anything else.
All right. So tell me how to use this as a trader.
Okay.
The longer the horizontal bar in white tells you that it was a heavier volume area. It tells you
Perfect.
where, is that it?
Perfect. But here's the thing. So as you move out, you're going to see it'll change and it all deals with time. So if I have a wider range of time, then you're going to see where right here is a huge
Yeah.
volume profile right here, right? But if I'm just looking at this
That's
area,
where it broke out at that 29,
yeah,
30, 40 area. Yeah. Okay.
exactly.
Uh,
Exactly.
all
So
right.
this is just confluence with everything I do. So I'll kind of go over real quick for anybody listening how I actually set up my charts. And what I actually do is I'll start from the weekly, and from every candle flip change on a trend change, I'll set my supports and then my resistances if there's anything. Obviously, we're in a little bit new charted territory over here.
Okay.
So I'll get those down. And then I'll go back into the market structure that's currently here, the most local market structure. And then I'll put in the daily support levels and
Mhm.
resistance levels that I have. So I get really accurate in there. And that's how I set my charts up to begin with. And then I'll get the first run up that I actually see with a breakdown. I'll set my fib from here to the top. And that's basically how I set up my charts. And then from there, I really don't have to continuously look back and set new levels. Those levels are set. I'll go back and
Nice.
flip up the daily levels here and there just to make them more local, a little bit more accurate. But from there, it's I like to take things simple, because as far as I can explain, the more difficult you make trading, to the more difficult it really gets. I mean,
Okay, so this resistance level that we're being rejected from actually this morning, if we get through it, how do you measure an upside target? You use fib extensions for that?
yes, exactly. And
Okay.
so right up here, oh, oh, I need to flip that back around.
Where do you trade from, Chad?
I trade from Denver, Colorado right now.
Nice.
Also, I'm based out of Oregon as well, and my other kind of business is actually the hemp business right now.
Oh, okay.
Very interesting. If anybody wants to know a little bit about the pot business right now, I do have a little insight. So what's happening right now, I'll kind of give you guys a little insight, is that
Do you
everybody,
trade the stocks, or you're just more interested in the growing or the distribution
I
and
do
the
both.
stores? You do both.
Because I'm wholesale. I go nationwide, and I kind of have a good insight of how businesses have structured themselves with this new hemp law that's happened.
Yeah,
It's a pretty big deal, honestly. It's
yeah.
a whole new commodity as far as I'm concerned, and it
You
really
making good you making good money doing that?
it kind of ridiculous money right now. So
Wow.
yeah, it's really good. It's gonna get saturated. However, that's what happened with the THC market,
Yeah.
and it's bound to happen. But we're kind of early in this game because everybody else is trying
So
to.
more CBD oil and stuff like that?
Yeah, so CBD,
Yeah,
hemp is
it cures everything, doesn't it? CBD?
apparently. I'm not gonna say
Can
anything.
I take CBD oil if I'm in a drawdown and I'll recapture all my capital?
Oh, if only we had that miracle cure. I think we'd all
I
be.
think I think I'd want to be a distributor for that.
I think you'd be richer than Jeff Bezos over here
anyway,
if you had that.
yeah, you take some CBD oil and you're even. I think a
Yeah,
few people would buy that. Okay.
I think more than a couple, but if you want to get in business after this, we'll talk about that. We'll figure it
Okay,
out.
buddy. Yeah.
Perfect.
I'm a product of the 60s and 70s.
Yeah. So well, then the it's kind of crazy right now. We have
Yeah,
the
it is.
entire thing.
I dreamed of the day it would be decriminalized like this. So it's pretty.
It's
I'm
wild.
glad I lived to see it.
Yeah,
Any,
absolutely.
anyway, so I know that you wanted to address some fundamental stuff. That you have some views
Sure,
on the Fed
I
and what's
do.
going on there. And you know what? It's most people. I think even Jerome Powell is
Hmm.
confused
Hmm.
about what to do. A friend of mine, Peter Bookvar, said that the Fed is not data dependent; they're S&P dependent. So, tell me what you think is happening at the Fed and the divisions occurring at the Fed. Some wanted to be even go easier, and there were some saying we shouldn't have done anything at all. Tell me what Chad Del Rosario is thinking about the Fed now.
Okay, so I kind of have a little theme I had set for this entire thing, and I'll kind of go off the beginning, and it will lead into where I think things are at. So, where I think we're at, or we're at an end of a cycle, basically a paradigm shift. And Ray Dalio, I'm not sure if anybody's heard of him.
Sure. Yeah.
Sure. I don't know if you've read his paradigm shift paper that he just recently released, or not recently, but
I haven't, so you'll give us a Cliff Notes.
yeah,
Yeah,
exactly. And
all right.
so this whole entire thing leads into where my macro perspective of trading is coming from is coming from this. And so every decade has its own distinctive characteristics. And at each end of every decade, most investors are expected the next decade to be pretty similar. And that adds a lot of complacency to the marketplace. And in fact, the subsequent decades are actually more opposite to similar than the preceding ones. And so that really results in movements that are pretty large and unexpected, and there's big shifts in wealth. And we can go through each decade, and in fact, I'm gonna touch on them, so that way, obviously, I won't talk through every one. I'm just gonna touch on ones, and there's going to be ones that the listeners will hear, and they'll be like, "Oh, right, you're right. Things do change every decade," and that's something I actually never thought about until I read this piece he wrote. And so, every major asset class has had great decades and horrible decades as well. And if you invested all of your wealth into one of these asset classes during a decade, on the wrong decade, you probably would have almost lost all your money. And so that's why cycles matter. And so I'm going to kind of lead into this of, how from the 1920s it started roaring. It was a boom to the bursting bubble. To the 1930s, it was the Depression. 1940s, we had war and post-war. 1950s, we had the post-war recovery. 1960s, we had the boom to the monetary bust. 1970s, we had low growth to high inflation, which is actually stagflation. In 1980s, we had high growth to falling inflation, which is actually disinflation. The 1990s was the bust to the bursting bubble, which is the dot-com era. If I'm sure this is getting to the point where everybody knows everything, 97 to 2001, 2000 to 2010, that was roaring, from boom to bursting bubble, which, everybody knows the housing market. And then we get to here, where we're reflation. We're a shift into the new coming paradigm. Central banks have been lowering interest rates and doing quantitative easing, which is experimental and still very questionable in my brain. And if anybody doesn't know what quantitative easing is, it's when the central bank purchases government securities or other securities like mortgage-backed securities, which are bundles of home loans, kind of packaged in a pretty little package that you can trade around. And this increases the money supply and encourages lending and investments. And so that's how we broke out of this mess we were in from 2007 up. And in my opinion, it's been unsustainable, and it's bloated the balance sheet full of junk bonds and all these other things. And recently, if anybody's listening to the meetings, they hinted at the expansion of the balance sheet, which reinvigorates quantitative easing. And so that brings us to the issue of where we're at with, we have a liquidity squeeze right now because of how things are moving. So we have the trade wars that are obviously, the yuan was devaluated to offset tariffs, and they did that because exports will actually increase, and that they actually stopped importing so much into China, because they saw this all happening. They realized they had to devaluate, offset these tariffs.
Who's they?
China did.
Okay,
Right.
yeah. So the yuan going down in value. Okay, go ahead.
Yeah. So we have that happening, and it's created a ripple through. If you throw a rock through a lake, it's going to create ripples out, and everybody else has had to ease, and that's where we're at right now. Is we have the Fed easing, the ECB easing, the DOE easing, the BOJ easing. I mean, we have almost everybody's easing right now, and we have a really strong dollar, creating a really, really strong demand for the dollar. And then that's where we had this repo market thing happen, and it's been kind of floating around the financial Twitter. I've noticed a lot, and that's something that's really never been talked about, is the repo market. And it was attributed to this mid-month jump to 8% was attributed to a confluence of events that knocked cash reserves out of their balance with the volume of securities on the balance sheets.
Yeah, they were saying it was corporate tax day.
Yeah, exactly. There was
But it took what, 60 billion to stabilize it.
Yeah, it was a lot, and it's as far as I know, I'm pretty sure I just read they're still
So
doing
is this
some.
the first crack of lightning into liquidity crisis, the opposite of what we've had
Yeah,
the last 13 years with easy money, that because of the
yes.
dollar, we're going to have liquidity issues with market structure, and it's going to create liquidation of almost everything.
That is kind of where I'm going to. I mean, this
All
is
right.
something I feel like not a lot of people are talking about, and
God,
uh,
I read about this in the 70s. It's an old book called The Great Money Panic
sure,
by Martin Weiss.
sure,
And he talks about like T-bill rates going to 20%, not because the Fed's raising rates and there's a strong economy or strong inflation, just because there's a shortage of cash. So people, just like what we just saw a week or so ago, the market bidding for cash and rates go up, not because of any fundamental reason, just because there's not enough liquidity.
exactly. And this is kind of a crazy situation for us to be in, and the reason we actually started talking, this kind of leads me back. So if you want to remember how we started talking, I had a comment about Bitcoin. And to be fair with all the listeners, I'm not the biggest crypto kind of guy. I actually made a good amount of money when the bull run happened, and I've had a decent time shorting it as well. But I actually do see a reason for Bitcoin, and it is weird that it decoupled recently from gold. I did notice a similar trend. I was actually trading Bitcoin and gold somewhat similar. In fact, I thought gold was leading for a little bit, and I messed up with this Bitcoin short recently because I saw gold moving up, and then we were at a support level on
Yeah,
Bitcoin.
correlations work until they don't. I know you've
Yeah,
only been doing this about 4 or 5 years, but yeah, it can throw you off. Actually, when you're trading, and I don't say stop looking at correlations,
sure,
but the best thing to do is treat every instrument like it's its own unique um, life or organism, and at times it detaches, and at times it connects to relationships. But trade the chart that you're trading.
absolutely.
But anyway, you're not the only guy, Chad, that follows the correlation, and it disconnects and misleads you. So, but
Yeah.
don't give up watching them, because I like that you have a holistic outlook for markets and you're looking at big picture stuff, instead of someone that comes in here and just shows a 60-minute chart. You know what I
Yeah,
mean? You
yeah,
got to use
no, I
your
appreciate that.
telescope, bro.
I agree. I think that's a big issue with a lot of traders I see. I see them too much into the intraday, whereas I'm more of a macro. I mean, I have a lot to do, so I also
Yeah.
trade macro, so I'm not like constantly staring at the screen. But I think that's the best way to do it. If you're gonna have a big picture outlook, you need to have that before you even have a general 60-minute chart up. You need to figure out where you're going, unless you're scalping. I don't see that being the best trading style.
Okay. So we're starting to run a little short of time. What's your outlook for Bitcoin after this big sharp
You know,
decline?
I'm looking at it right now, and honestly, it does not look too hot. I actually
Yeah.
thought it was going to look a lot better. This looks like we were going over volume profiles real quick, and if you can see right here,
Yeah.
big volume profile, 300-day EMAs right here as well.
Yeah.
So
Maybe
honestly,
7,000, 6,000 for a buy point.
yeah, so right here, here's my big levels I'm gonna hit. It's either gonna be 7,667.50 right here, or we're hitting the sixes right here. And I'll tell you, since we're running low on time, if it drops below 6, that's when I'm worried. That to me
Okay.
is a big psychological support. It's what, in my opinion, brought us to the new bull run, if
Yeah.
you can call this a bull run.
Under 6, we won't see 18K again. If it holds
I
above
don't think
6, we could.
I don't think so. And I think there's one thing to be said about this backs coming in is that if you looked at the volume on there, it's pretty pathetic.
Yeah.
It's you're showing that institutions aren't really
No.
buying. So
Yeah.
what
And
is
if there's a liquidity crisis, why wouldn't crypto get caught up in that? People will sell the kitchen sink to raise cash.
Yeah, so I agree with that as well. I think there's going to be an issue with that. I think what real quick with the Bitcoin, I think we just have political factors that can add to that and
Oh
just
yeah, the
actual.
government, yeah, the government doesn't like it. They want their own
Yeah,
or
exactly. And
something.
if you notice, all the governments are talking about stable coins now.
Oh
So
yeah.
that could be, who says Bitcoin has to be the cryptocurrency? They could create their own crypto, which it seems like they're doing.
Yeah. Okay. Well, I hope you enjoyed yourself.
I did. I
I
appreciate it.
I enjoyed meeting you, and I think you're going to have a great career in this.
Thank
You're
you.
a thinker, and you know what else you are now?
Mm,
You're now my new trading warrior brother.
all right. I like to hear that. I appreciate you having me on.
Yeah. So the best way for people to follow you, Chad, was what? Twitter? Do you? I
Yeah.
notice. I notice on your Twitter, your link is to AOL.
Yeah. So, I kind of made this whole thing. This has just been kind of a fun way to share the trading journey. And I have
Yeah.
noticed, my following group getting a little bit bigger. So when I harvest all this CBD and my life settles down to the businesses, I think I'll start up a little trading group, but I won't charge. I don't believe in the charging aspects.
Okay. Well, I disagree.
All right. Well, it's a
It'd be,
capitalist society, so
it's also why are people, and I'll end it with this: why are people willing to pay, which I recently have,
mm,
their CPA,
mm,
their lawyer,
mhm,
their doctor,
true.
but not traders?
Fair enough. Fair enough.
Okay, so I rest my case, and
Yep.
because we're all specialists, and it
Absolutely.
takes specialized knowledge, and I can't remember the last time I went to the doctor, and he said, "Oh, that's on the house, Dale."
Yeah.
So anyway, just food for thought. And
Fair enough.
Chad, great meeting you. Thank you
Thank
so
you.
much for um, hanging out with me today and edifying face.
Absolutely. I appreciate it. And yeah, let me know if there's another opportunity.
I promise there will be.
Okay.
And
Perfect.
let's stay in touch on Twitter.
Absolutely.
Talk about some other things too. So that's a wrap, everybody. Earlier in the session, I talked about the dollar potentially weakening, and as you can see, we're getting that. Swiss came off. We were talking about it up here. And Euro continued to squeeze after they took out all the stops. So this is the example of the stop hunt. Everyone's stop was elected under this low, under 26. We went to 22. They're out and they're going, hey, how come I'm still not long? Anyway, that's a wrap, everybody. Remember, don't just count your pips, count your blessings. And see everyone for TGIF. And there is a recorded version of the webinar. And also, I want to remind you guys, this is the last few days for our promotional offer. So if you haven't acted yet, the window of opportunity is